All right, we turn our focus now to precious metals. Gold hit a record high earlier today as U.S. lawmakers failed to reach a deal on the debt ceiling. Suki Cooper is an analyst at Barclays Capital. She's also a Bloomberg best forecaster of precious metal prices. She sees near-term consolidation ahead for gold in August. And Suki joins us now from her firm in New York with more. And let's be clear, for those of us who may not know what consolidation means, Suki, you think prices are going to head a little lower from this point?
There's a couple of interesting dynamics at play at the moment. The macro environment is very supportive for gold, and we're seeing investors turning back to gold after not really adding too much to their positions at the start of the year. But we've got a few other dynamics at play that could cap the upward momentum in the near term. So one instance is scrap supply. We've actually seen some scrap merchants indicating that 1600 is a key marker for when they may start to release extra supply. On the other hand, we've actually seen some profit taking kicking in above 1600. And on top of that, we're in a physically weak period for physical demand. So given that we're in this period at the moment, that macro environment might not be enough on its own to send prices continuously higher. So we may see prices trending lower in August and then stabilizing around those levels before regaining their upward momentum.
And you have out in your note the target prices you have for the end of the third quarter is $15.60 an ounce, as well as $15.80 for the end of the fourth quarter. So certainly lower than where we are at the moment. Tell me this, though. We've been seeing this real sort of risk aversion trade for a while now, and it keeps pushing gold to new highs. How high do you think we could go just based on the psychological impact of what's happening in D.C.?
Our forecasts are very much based on what the underlying supply and demand dynamics are performing, as well as what the currency interactions with gold are performing at the moment as well. So if gold ignores its supply and demand dynamics and sidelines the fact that we're in a seasonally weak period for physical demand and solely concentrates on its currency factors, we could see prices testing fresh highs beyond 1625 that we've seen already, and towards 1650 as well. Certainly our technical analysts, from their viewpoint, see prices hitting towards 1670 in the medium term. So there are definitely more bullish factors at play at the moment, but I think the real concern at the moment is what the commodity factors are saying.
Suki, let me also ask you, I know you're really focused on supply and demand there, but a number of analysts are out today with notes related to what should happen if the U.S. debt gets downgraded. Have any of your clients asked you about the impact that might have on gold? Is that an analysis that you've done as well?
It's a concern because the question then is, do investors look to something else as a safe haven asset? Do they move away from other currencies that they deem to be safe and start to look to gold? But the gold market's actually a very small market, so if we see many investors starting to turn to gold, then that could certainly push prices much higher than where they are at the moment. Given at the moment we've seen the ETF flows picking up, we've actually had total holdings at record levels. But the pace of buying so far this year has been much slower when we compare it to the sort of buying we saw in 2010 and the initial onset of the sovereign debt issues in Europe. So the pace of buying has slowed down, but we are at record levels in terms of ETF holdings.
Let's turn very quickly to silver. Flows there also at their highest level in some time. What do you expect will happen in the silver market?
The silver market, I don't believe, is as well supported as the gold market. In the gold market, we've seen a number of structural changes. Whereas for silver, we're still looking at a market in surplus. That mine supply is continuing to grow and hitting fresh record highs. The industrial demand has slowed down a little bit, but is still at a very healthy pace. So we still have a much larger surplus in the silver market, and the market is still very dependent on investment demand, more so than gold. So if the investor interest eases a little bit in gold, we'd expect it to be a much sharper correction in silver. So I'd say silver is much more vulnerable to the downside in the near term.
All right, Suki, unfortunately, we got to leave it there.